Hey everybody, it's Mike Weller, the Weller Group at Keller Williams Realty. We are here for our monthly mortgage moment with Momi. Hi Momi, how are you?
Good morning, Mike. I'm well. How are you?
I'm good. So we are filming this. It's a couple of days after Election Day. Nothing is completely quite settled yet. We're not going to get into any kind of political or election discussion really. Other than, talking a little bit maybe about rates leading up to the election and kind of how that has gone. And then, maybe we're getting close to January 1st. So what's in store for the new year? But let's talk about kind of rates and the rate market and everything over the last few weeks or so since the last time we spoke.
Well, thank you, Mike. What I am going to say about the election is that election results require patience. Whether that's with them announcing our new leader of the country, or whether that's seeing what's going to happen with the mortgage bond market, because as very few people do understand, the mortgage bond market is pretty much what drives rates up and down. So we did expect some volatility this week. Yesterday was actually, I wouldn't say it was volatile, but the bond market was way up, which kind of made rates a little bit lower, but actually not as low as I thought they would go. Right. And the bond market is up today. So, I mean, the bottom line is that if you haven't refinanced, you should get on the bandwagon because rates are still low.
Right. And the thought is probably going up a little. I mean, not tremendously, but probably not, not expecting a big dip necessarily, right? Nobody knows for sure ever, but that's not the feeling, right?
Right. Nobody knows for sure ever. But the feeling is, well, we talked about inflation. I don't know if it was last month or the month before, and that may raise rates a little. I haven't seen a whole lot. But I truly believe that the feds are going to want to keep the rates low for the next 1 to 2, maybe even 3 years is what I'm hearing on the street. Whether they do or not is a different story, because obviously catastrophic events have an effect on rates. It's now a global economy. Obviously the election has an effect on rates, but I think for the most part, we are going to see rates low and low, what I mean by low is in the twos. You and I talked about that. I'll quantify that.
Right.
So rates are still going to be, where people will want to refi.
Yeah, no, for sure. I mean, I think it makes sense to, if you haven't refied, and I don't know what that number is. It's probably 0.5% higher than what rates are now. It probably makes sense. It certainly makes sense to at least explore it, have a conversation with, somebody smart on the mortgage side like you. So,
Thank you.
We're getting towards the end of the, presidential election, odd number year, every year changes to the next year, and every January 1st, new things happen. But in the mortgage side, what does that mean? What can we expect just because January 1, 2021 is less than 2 months away?
On the mortgage side, we can expect actually, hopefully, some really positive changes. With rates still low, this is the time of the year, like in November, where the FHFA, which is the Federal Housing Finance Authority, they release the revised conforming loan limit for the next year.
Right.
So it's around the week of Thanksgiving. And if we look at history, the past 2 or 3 years, they've raised it about $39,000 every, added $39,000 every year. So I'll use an example. Last year, and we are in I should clarify that, Mike, Orange County, LA County, some of the counties up in Northern California, and even San Diego County are what's called high cost areas, right?
Yes, everybody knows those are high cost areas. Yeah.
Most people do, right?
Most people do.
I mean, our borrowers might not, but yes. So like San Bernardino County, Riverside County, those are not high cost areas, even though the loan amounts are actually getting up there out there.
Right.
So what that means is last year, gosh, if I can even remember the loan amount, I think it was 424 424 was the conforming loan limit
Yeah.
last year,
420
2019.
Yeah. 424, 500 maybe?
424, yeah, 500. But in our area, high cost, it was 424, and then you could go up to 673, and it would still be considered conforming. This year, it's 510. So we went from 424 to 510. And now we can go all the way to 765, 600, I believe it is, 765, 600 for a loan amount that is still considered conforming.
Right.
Well, if history repeats itself, we could be at 424 minus 510. Let me just do some quick numbers. That was like an $86,000 jump, right?
Yeah.
So, wow. I don't know if they'll jump it that high, but if they do, then the conforming loan limit will be, I don't know, close to 600, right?
Yeah.
Or, yeah, 596.
Yeah.
And then the high balance conforming loan limit will be over $800,000.
Yeah.
So,
yeah. Long story short, if you're shopping, if you're looking at houses and your loan amount is right around those numbers or maybe a little bit over, it might make sense to have a conversation again with your mortgage professional about, hey, what will this look like if the limit gets pushed up above, the mortgage amount that we're looking at.
right.
So
Can I use an example just so people understand that?
Absolutely.
Thank you. So I have a client who is looking to refinance. Loan amount is, let's just say it's 800, and he was actually, it's a little under 800, and we were going to refinance, and he was going to bring in the cash, bring in the money to bring his loan amount down to the conforming high balance loan limit, which is 765.
And why would he do that? Explain that to people. Why that would be advantageous?
Actually, that's a good question. It would be advantageous for him because the rates on the conforming loan limits, whether it's high balance or conforming, is actually lower than the jumbo rates.
Yep.
And the guidelines are less restrictive than
Yes.
jumbo guidelines.
Right.
Way less restrictive.
Right.
So it's a Fannie Freddie underwrite versus jumbo, which is non-QM,
Right.
which means qualified mortgage underwrite. So
Right.
that's why he would do it, and he would get the better rate.
Yeah.
But we're so close to getting these new loan limits that I recommended to him, rather than bringing in all the money to close or bringing in the money to bring the loan amount down, why not wait to see what FHFA is going to raise the loan limit to? If we get close to 800 or even over 800, he's now in conforming high balance, which means he doesn't have to bring cash in to bring the loan amount down. He'll automatically benefit from the lower rate because rates are still low. And we don't have to contend with the jumbo guidelines. So I think it's a win-win all the way around. And I have a lot of buyers in that same situation, where if they wait until January 1st, so it'll be released in November, but January 1st is when it goes into effect.
Right.
They might actually have more buying power come January 1st.
Sure. So long story short, here we're sitting here on November 5th. In a few weeks or so, we will know what those numbers are. So then people can really, plan accordingly if it makes sense for them to wait for January or not. So everybody should stay tuned for those numbers, basically. Coming soon.
Yeah.
And again, the difference being, like the example you were talking about before, just for people to understand, if it's under that high balance limit, like you said, it's a Fannie Freddie backed loan, meaning it's a government loan. So there's certain guidelines and there's more money in that market. Fannie Mae and Freddie Mac through the government, sort of, kind of, it's a whole other conversation, but there's money flowing through to fund those loans. Once it goes above that limit, jumbo really just means that money is not funded by Fannie or Freddie or backed by Fannie Freddie. So that's really just private portfolio. It's banks basically lending their own money at their own risk, where the other, if it's under the limit, it's banks lending money. It's not all their risk. There's a lot of backing there from Fannie Mae and Freddie Mac. So that's why those loans are better rate wise, and term wise, and being able to qualify.
That's absolutely correct. Fannie and Freddie are government-sponsored entities,
Yes.
so backed by the government, lower rates. You're right, the jumbo rates are, so the minute you go over a dollar over the 765 balance this year, it's a jumbo, and it's typically a portfolio lender like the Chases,
Right.
cities, Union Banks of this world, where they hold those loans.
Yes.
They hold on to those loans themselves. They underwrite those loans, and the risk is theirs.
Right.
And there's a loan. Yeah.
Yeah. Yeah, for sure. So,
Good
okay. So in
information.
summary, market has the mortgage rate market has not been as volatile as you had thought. Hasn't dipped the last couple of days like you would have thought based on the bond market.
Yep.
You don't expect rates to really drop out. If anything, they might go up here a little bit over the next little while. And if people wait a few weeks, we will know what the new loan limits are for January 1 and expect them to be higher, a decent amount higher probably than they are right now.
Perfect. If history repeats itself, yes, and that's a perfect summary.
Yes. Okay. Okay. And if anybody has any questions on any of this, they should call you right now. Right?
Right now.
Right.
Yes. One thing, can I clarify something, Mike?
Yeah.
We mentioned the 0.5 point difference. I still have clients that, like I refinanced at the beginning of this year, that got a 3.5 or 3.875, which was a great rate at the beginning of this year, right?
Yeah.
But where rates are right now, literally could probably drop a whole entire point off of their rate and save them money. So anybody that refinanced 6 to 9 months ago, or even purchased a home 6 to 9 months ago, should have somebody like myself, have a mortgage loan originator, evaluate whether it makes sense to refi.
Yeah, and I think some people get stuck in that place of like, oh, I refinanced already, it's going to cost too much to refi again, or, I just bought my house last year, it's going to cost too much to refi. I mean, I'll talk about, I'm kind of the perfect example otherwise. We bought our current house 2 years ago, a little bit more than 2 years ago now. We refied 3 times already. In the long run, it just makes so much more. Unless you think you're going to be selling your house and moving in 6 months or a year, that's a little different. But that's why it makes sense to have the conversation with you. So.
And evaluate.
Yeah, absolutely.
Yep, for sure.
So.
Thank you.
Okay, you're welcome. You're welcome. So everybody should call you right now, or wait until the end of the month if you're kind of like around the. Either the conforming loan limit or the high balance conforming loan limit, wait a few weeks, check in with you maybe just after Thanksgiving.
Yeah.
See what that looks like. Yeah.
Absolutely.
And we'll check back in December, and hopefully we will, all the election stuff will be behind us then.
We hope by next week, but who knows?
I hope so. So, okie doke. So, all right, Momi. Well, thanks so much. Thanks for joining.
Thanks, Mike.
We'll talk again soon. See you next month.
Likewise.
All right. Take care.
You too.